Level 1. The $100 account. The owner of the world. You buy your first share during a lunch break. It's a fractional piece of something loud. Apple, Tesla, or some biotech firm you read about in a Telegram channel. You spent $100 on it. Money you saved by skipping a few takeout meals. When the app flashes executed, you feel a strange surge of importance. You're no longer just a consumer, you're a capitalist. You check the quotes every 5 minutes. If the stock drops 12 cents, your mood sours. If it gains $1, you start multiplying that profit by 1 million in your head, imagining what life will be like when you have real money. You aren't investing yet. You're buying a lottery ticket that gives you the right to feel smarter than your colleagues at the water cooler. Your planning horizon is Friday. Level 2. The $5,000 portfolio. The studio apartment strategist. You've been doing this for 18 months. You have a strategy now. You call it diversification. You've bought an index fund, a couple of bonds, and a moonshot that's supposed to take off. You dumped $5,000 into this, money you saved for a vacation. You convinced yourself that memories can wait, but compound interest cannot. At this level, you begin to feel physical pain from drawdowns. When the market dips 5%, you lose $250. That's the price of a pair of sneakers. You start recalculating your losses in terms of material goods. You read annual reports before bed, even though you only understand half the words. You feel like you found the pulse of the economy. You argue with your wife about why you don't need a new sofa, because now is the best time to average down. You defend your positions in arguments as if they were your children. Your account ends the quarter down 8%, and you call it building a long-term position. Level 3. The $50,000 account. The point of no return. The money is getting heavy. $50,000 is an amount you spent 3 years accumulating, working yourself to the bone, and saving every spare cent. You've stopped calculating losses in sneakers. Now, a drawdown is a used car. You notice you've started talking about investing less with your friends. They don't understand why you look so exhausted when the S&P 500 drops 2%. You subscribe to paid terminals, you have an Excel sheet with 30 tabs, and you know ticker symbols better than your nephew's birthdays. You're starting to understand what risk actually is. It's no longer excitement. It's the fear of making a mistake that sets your life back 3 years. You sell a stock for a massive loss for the first time just to save what's left, and you don't sleep for 2 days afterward. You realize the market is not your friend. It is an element that doesn't care if you exist. Level 4. The $250,000 account. Professional coldness. You've crossed the threshold of an accredited investor. You have $250,000, and that number no longer feels huge. It feels insufficient. You no longer check the screen every 5 minutes. You look at it once a day with a cold squint. At this level, you realize that your personal preferences, I like this brand, mean nothing. You buy companies you hate simply because they have good cash flow. Your personal life has become quieter. You're no longer trying to impress anyone. Your old friends seem reckless to you when they discuss buying a car on credit. You calculate their interest overpayment in your head and wince. You are alone in your calculations. Money has become a tool, but it's a tool that requires constant sharpening. Your portfolio grows by $20,000 in a month, and you just close your laptop and go drink a cup of tasteless tea. You feel no joy, only the relief that everything is going according to plan. Level 5. The $1 million account. A statistical unit. 1,000,000. You thought that when you reached this point, music would play and your life would change. But instead of music, there is silence. You realize that $1 million today is just insurance against poverty, not a ticket to paradise. You begin to think in terms of capital preservation. Your taxes have become more complex than your first strategy. You spend more time talking to lawyers and tax consultants than picking stocks. You see patterns that are frightening: cycles, inflationary spirals, geopolitical shifts. You aren't playing anymore. You're maneuvering a massive tanker through a narrow strait. You notice that people around you are starting to see you as an opportunity rather than a person. You close off. Your social circle shrinks to 3 people who understand what asset allocation means. You remember that thrill of the first $100, but you can't get it back. It's like trying to remember the taste of a meal you had as a child. The details are there, but the flavor is gone. Level 6. The $10 million account. The family office. You are no longer an investor. You are a structure. You have a hired manager, analysts, and a concierge service. Your task isn't to earn, it's to prevent the world from taking what you have. You think in generations. You don't care about what happens tomorrow. You care about what happens 30 years from now when you might not even be here. You buy entire buildings, stakes in private equity funds, and land. Money has turned into an abstraction, into digits on secured servers. You eat breakfast in a place where a cup of coffee costs as much as your first investment. You watch a guy at the next table poking excitedly at his phone, showing his friend a chart of some crypto. You see a ghost in him, yourself from the past. You want to walk over and tell him that the finale of this game isn't wealth, but total loneliness surrounded by perfect comfort. But you just finish your coffee. You know he wouldn't believe you. He needs to walk this path himself. You stand up, straighten your jacket, and head to a meeting with a trustee to discuss a trust for grandchildren you haven't even met yet. The market opens in a minute. You don't care. You've already bought the whole market.